Welcome back to Scene. I'm your host, Diona Richards, and joining us today is Porsha Brooks. Porsha is the founder and CEO of LenPick, a online marketplace that connects business owners to lenders nationwide. Thank you so much for joining us, Porsha.
You so much for having me. It's lovely to be here. Thank you, D.
Absolutely, absolutely. So we're excited to learn more about LenPick and what you all do, how you connect business owners, the type of lending that you all offer. Tell us, what is LenPick?
Goodness, let me try to simplify this. But how long do we have? We have like 30 minutes. I can make it.
Listen, we got a full hour. Take as
All
much
right,
time as you need.
not a problem. Okay, so what we do here at LendPick, we simplify the business lending process,
Mhm.
right? And so we are connecting business owners with lenders across the U.S. We're doing that in two ways. We're connecting them with term loans and lines of credit. So business term loans, business lines of credit. The idea is to match a business owner with basically a lender that wants to invest in their business.
Mhm.
So that's what we're doing. So we're facilitating that. We're like, we're playing that facilitator. So we're playing that middle person that's taking that business owner and then finding that lender wherever they may be located across the US. And then basically, saying, yes, this is the lender that can approve you. This is the lender that wants to invest into your business. So it's simplifying the entire process.
Absolutely. And that's great, right? Because when you're a business owner and you need access to capital, the last thing you want to do is spend your time trying to go to different banks, whether it's your personal bank or business bank, hoping that someone will approve you so that you can get this credit to buy equipment or make payroll or whatever it is that you need to do. And so, um, when you are vetting these business owners, talk to us a little bit about what that looks like. How do you identify if someone is a good fit for your marketplace?
Yeah, absolutely. So we've come a long way in this marketplace. The idea is that I've studied business lending for months. I've been doing this for years, right? And so I hopped into this industry in the MCA world. If people don't know, that's merchant cash advances. And with merchant cash advances, that's high interest loans. And so I wanted to come out of the high interest loan space, so to speak, and try to offer individuals the basically what everyone wanted, low interest loans, lines of credit, things that were not going to eat their cash flow. So now with that, with term loans, lines of credit, there's lots of different options out there, lots of different institutions that offer these products. Now you're going to have CDFIs, you're going to have credit unions, you're going to have banks, as you said. So that's at the national level, that's also at the regional level, the local level, and you're also going to have online lenders. Now, all of these guys have different requirements. So it's up to us for the most part to know what that underwriting looks like on their side so that now when we are vetting that individual, we're asking them basically just series of questions about their business, about their personal life, right? Like, we're getting to know the business
Right.
owners. We are asking like, okay, hey, like, why'd you start your business? Like, tell me, like, what type of funds do you, need, or how much funding you do need? What are you going to use it for? So I want to know the particulars about exactly what you're looking for. That's one. That's going to determine, exactly what type of lender, can fund you. But at the same time, now let's dig into some stuff about your business. Like, let's talk about when you started your business. Let's talk about what your business is about. Let's talk about how much money your business makes. Let's talk about how much money you may make on the side from your business. If it's, credit, let's talk about the credit score. Let's dive a little bit deeper into the credit score, like let's go into the report. Like how, do you
Right.
pay your bills? Like, do you have any collections, any derogatories? All of this is not going to necessarily disqualify you, but the idea is to get a very detailed understanding of your story so that we can see exactly which underwriting guidelines for which lender in the US you match.
So you all go through the full know your customer process and then you take it a little deeper and go beyond just the base level of knowing your customer, but really developing that type of relationship with your customer. In your experience, do you find that the deeper you go, does that have a higher impact on their approval ratings? Or if you stay kind of just surface level, that doesn't really matter?
Well, that's a good question. 100%. I do think it actually has an effect on their approval rating. One, it has an effect on our relationship. So that, the trust factor, is there as
Mhm.
well. People like talking about themselves. And so that's one thing. But at the same time, the deeper I go into your story, the more I can, there's certain things that you may not know to tell me. And I have to, I have to pick that up. I have to pick that up in, what you're talking about. And once you say something, it triggers. And I'm like, oh, okay, well, that's so it's a question that I normally wouldn't ask, but the fact that you brought it up now, like I know kind of where we need to sway this, which lender we need to go with, which kind of program,
Right.
like you won't get approved for a line of credit now. But so I do want to go as I say, tell me everything. And even with, for instance, like SBA lending. Everybody knows SBA lending. With SBA lending, they always say lenders always say, "Tell me everything." Now it's a little bit different than telling the lender everything versus telling me everything. I'm not the lender, and so the idea is you tell the lender that you're with everything. There's something that just may disqualify you, and they're not gonna,
Right.
they're gonna be listening. Like, they're gonna be like, "Oh, all right, tell me more." Tell me more. All right,
Right.
cool. And as soon as you say that more, they're gonna be like, "All right, that's it." It's a wrap. Like, we can't do this. With me, it's like, okay, tell me more. All right. Okay, got it. So let me find that lender that will allow, basically you to have this or will allow this to be, on your credit report. There are some lenders that don't like child support. Like, and so as soon as that comes up and it's like, oh yeah, normally I would see it. But if it's like, I have a child support collection on my account, there's lenders that'll be automatically no. So you don't have to go through that process. Basically, once you're with that lender yourself, once you go directly to that lender, you wouldn't know that. And so that's where
Right.
that's where we're simplifying that process. But yes, the more we know from the client, the better.
Yeah, and that's great. And I think you bring up a really good point about being honest and open with you, right? Because
Mhm.
you can help guide them to the best lender again, as opposed to just trying to scramble and figure it out yourself. When you're talking, I'm a former banker, so I've had these conversations with business owners, and you're absolutely right. All it takes is for one thing to slip out, right? And now I'm like, oh, well, sorry, this is a great hour conversation that we spent together, but you
Yeah.
just said something to me that I know is kind of a red flag. So I think it's awesome that you're acting as that middleman to go in between and really understand, because a lot of times from our perspective as the lender, we're not thinking about I appreciate you sharing your backstory, but the reality of it is I have to either try to get you approved or you're not going to be approved. That it's very black and white,
Exactly.
right? But when you
Exactly.
bring in someone like yourself, you can take that time to understand the background on why this person may be filling this particular bucket and why this
Mhm.
lender may be a better opportunity for them. So I think that that's wonderful.
Yeah.
When you are kind of vetting these lenders that are in your marketplace, what do you look for?
So it really is. So the goal of our company is really to have every lender in the US within one place, our database. And so now
Hmm.
people don't have to go necessarily to the banks. They don't have to go to lenders. They don't have to go anywhere but to us to find out which lender is going to approve them. It doesn't eliminate the lender. It just eliminates the footwork, the process. So now when we're speaking with lenders, really it's just about, I mean, tell me your underwriting qualifications. I want to put you in my program anyway, because there may be something that you offer that someone else doesn't. It may be an interest rate that you're able to give or a term
Right.
length that you're able to give that another lender is not able to give. But overall, it is good, as we're building to have lenders that are offering something that other lenders are not. But there's two different things that we look for when we're looking at lenders. One is the location, because sometimes it's more so about having a lender that's kind of close, especially if it's a credit union, having a lender that's close to that business owner, so they can potentially go in, to the credit union and speak with someone and have a personal relationship with them. And so if it's location, it's like, okay, great, we have a lot of individuals in the Texas area. So, like, we want to get as many lenders as possible from the Texas
Right.
area so we can support those lenders. But generally speaking, it is all right. Well, do you offer a term loan? Do you offer a line of credit? What exactly are your terms? Do you have do you have minimum credit requirements? That's
Right.
big, because a lot of individuals that come to us, have credit problems. A lot of them is just, so large, which is kind of crazy, deep, because the statistics behind it is that the average person in America has like a 719 credit score. like something like that. And I'm like, where? Like, I don't see these people.
Right, right. Where are they? Find me.
Yes. But yeah, so it's like, yeah, credit is big and there's other, revenue. Do you take startup businesses? So there are
Mhm.
a lot of things that we want to make sure, we are getting enough lenders in our arsenal that can support startups and people with bad credit, individuals who have problems or hiccups
Right.
on their report.
Yeah. On your site, you talk about two of the biggest problems that you've seen when talking to business owners about getting access to capital. They face problems with approvals and options. And so that's where you all kind of work in that space to eliminate those hiccups, eliminate those hurdles, right? Where you have a marketplace of options for lenders that you're going to work with exclusively to make sure that they're a good fit for your customer, and then working with that customer to make sure that they're getting approved. What are some reasons that a business owner would need access to capital?
So many different reasons. One, so it's really three different categories and so many different subcategories fall into that. So it's either they need money to start a business, or they need money to maintain their business, or they need money to grow their business. Everything is really going to fit into one of those three reasons. So the idea of a start a business, very simple. It's just like, I have an idea, or I've been working for someone else. I've been working driving for FedEx. Now I want my own truck. I've been working at a restaurant as a manager for some time. I want my own restaurant. I just whatever. I had a company that reached out to me yesterday. It was like, we wanted to start a battery company. No, we don't have
Mm.
experience in a battery space, but we're Black individuals, we're twin brothers, and we just wanted to do something different. And it's like, all right,
Right,
cool. Let me see if I can get you some startup capital. It is easier for startups when they have experience in whatever they're
right,
trying to. But that's one. And then others is a lot of people, especially in the economy we're in right now, are trying to maintain. They're trying to not go out of business. And so whether that's, I have payroll coming up on a Friday. I need money for payroll. And I had
mhm,
someone reach out to me yesterday, literally with, that reason of they're an equipment company. And it's like, well, I just need my next two payrolls. That's it. I'll be able to pay it back, fairly quickly.
right,
So that's just maintaining. That's just trying not to go out of business, trying not to lose your employees. And then there's that, I want to grow, which to me is probably the best reason that you would, need capital. I want to grow my business. I've been doing, whatever strategy I've implemented, it's been working. I want to
right,
put more money into that, and so that could look like anything. That could be more equipment. That could be marketing, I mean, it literally kind of that list goes on. More employees, just operating capital for all sorts of reasons.
mhm,
But you want to get your own, potentially your own business location. There's a lot of different reasons for working capital.
right, right. Yeah, and
Mhm.
those are three excellent reasons. And I want to go back a little bit about the startup capital, right? Because we hear a lot about I have a business idea, I don't have the money, I'm using my paycheck, I need money to start this business. And so when
Mhm.
you're having those conversations with, people who are kind of in that idea phase, what advice
Mhm.
do you give them? How do you help them get ready for a startup loan?
It's a very good question. Startup topic. Okay. So
We could be here all day talking about
yeah,
startups.
it's so many out there, and everybody like
Right.
online. It's so funny because I had a startup business that reached out to me who wanted to start laundromats, who wanted to open a laundromat, and I'm like, all right, cool. Like what experience do you have in laundromats? And she's like,
Mhm.
none, nothing. I know nothing about it. However, I was scrolling through TikTok and she was like, to be honest, I find everything on TikTok. And that's not the first time I heard that. I keep hearing
Mhm.
this. People are
Yeah.
finding all these ideas on TikTok. Somebody told me that they opened an ATM business, which was doing like fairly well, but they got the idea off of TikTok. So a lot of
Mhm.
startups are just jumping and diving into ideas, not necessarily having the experience. But one thing that I do tell startups is that when you want, this is not just overall, this is if you want lending. So if you want
Right.
funding from a bank or from a lender, they want to make sure you have experience in whatever you're
Right.
doing, or you are bringing someone on who has experience. That's like
Mhm.
one of the, I mean, that's really one of two large factors that you're going to have to bring to the table. So if it's not the experience piece, it's going to be the income. Well, I guess, two things essentially, but it's going to be somewhere around financials. One, you have to have outside income. So the idea
Right.
of, I got an idea, I got a business idea, I'm jumping all in, I'm quitting my job. No, don't do that.
Right.
Like, don't,
Right.
don't quit. Like, you need that job to sustain that business loan, if
Right.
anything, until your business picks up. So lender's definitely going to be looking for outside income. That's the next thing. And then also you have to have some type of equity injection. So basically some type of down payment. You have a project. I want to, like the example, I want to open a laundromat. All right, well, let's say you do have some type of experience. Now, how much is it going to cost for you to get that location? How much is it going to cost for you to get the machines? Like how much maybe it's already put together. How much is the whole project going to cost altogether? Now, with that whole project, there's a piece of that project you have to bring to the table. So now there's about 15 to 20% that you're going to have to inject into that business. So the lender's going to be like, all right, cool, no problem. I get you, I'll give you 400,000 for this, but you're bringing 15% of that to the table. And so you're like, damn, like I wasn't expecting that. Like,
Right.
I don't have that. And it's like, all right, well, like that's something that you will have to bring to the table as a startup. Unless you do like business credit card, like you can start simple with startups. You don't have to jump into a business bank loan, right? You
Right.
can
Right.
do you can do business credit cards. There's, I mean, that's kind of the range for funding. It's like business credit cards, a bank loan. You're not getting a line of credit, like a business line of credit as a startup. So you really do just have kind of two options. But the bank loan, there's a lot of different ways that we can maneuver a bank loan and who we can go to. But you're always going to come to the table with some type of equity injection. So those are mainly the three things that you need: the experience, the equity injection, as well as outside income as a startup.
Absolutely. Yeah, and no, those are great points. And so do you find yourself having to be sometimes sort of a mentor or coach to these new business owners to help get them ready for that type of financing?
That's very, yeah. I do look at myself like that. What's funny, D, is I look at myself kind of like the fifth person on Shark Tank, right? Because I'm always listening to someone's business story. Like I'm always like,
Right.
cool. Let me see if this is gonna, let me think about this. Is this gonna work? Like, it's not really my job to say if it's gonna work or not, but it's more so like, okay, well, this is the route that you need to take to get funding. Whatever you
Right.
do
Right.
outside is cool, but if you want funding, like this is what it's going to look like, and this is what a lender is going to want to see. So yes, I'm steering, I'm guiding, I'm letting them know what
Hmm.
those qualifications are. And then sometimes that, even with that laundromat, I told, she actually had an idea for a laundromat, and she had an idea for a cleaning service. And so when I first spoke with her business actually was labeled like, you know, so like Sophie's cleaning service, something like that, right? And I'm like, and then she was like, oh, I want to open laundromats. And I was like, oh, that's not, like, it didn't match. I don't, and she was like, oh,
Right.
well, I wanted to, she was like, you know what, because I wanted to do the cleaning service, but then I saw the stuff on TikTok and I was like, I need to jump into laundromats. And I was like, well, do you have experience with the cleaning service? And she's like, well, yeah, I do. Actually, I followed some people around doing the cleaning service. That was what I was into for months. But then somebody said the laundromat is the way to go. And so then I had to be that mentor to be like, listen, sis, like, I don't think you really should jump down a laundromat route. Like,
Right.
you should probably go with what you know. I said, do you know what it's gonna be to try to go and open a
Mhm.
laundry? You don't
Right.
got no experience. Like, and then she was like, oh yeah, the laundromat. I saw these laundromats that have bars, which I didn't know about. My sister actually said she does, but they have like these bars set up in the laundromat where
Oh,
and TVs, yeah. And so you can like chill in there. So basically to, I guess, make a individual not go home. I
oh,
don't,
wow.
yeah, be more comfortable.
That's
But
interesting. Yeah. That's
yeah,
pretty cool.
yeah. Yeah, I think so too. Like, so you sit there, you have a little drink or whatever. I'm like, okay, cool. And she was like, yeah, I want to incorporate that into my laundromat. And I was like, okay, that's a great idea, but like not for you. Like
Yeah.
you don't know how to do that. So
Right. Right.
so yeah, it's
Yeah.
good steering. Yes.
Yeah, no, that's a great point because I understand exactly what you're saying. I have so many people are, oh, I saw this on TikTok. Oh, I want to do this and I want to do this. You want to tell them you have to be focused, right? And you have to play on your strengths and you can't jump on the next big trend or what's working for someone else
Hmm.
because you don't get to hear that person's backstory.
Yeah.
You get a 30 to 60-second clip of what success looks like, but you have no idea what's happening when that person, stops
Yeah.
recording. I do like the concept of a bar inside of a laundromat. I lived in Dallas, and the laundromat that I lived in, I mean, that I went to in Dallas, it was attached to a Mexican restaurant. And I was
Oh,
like, this is such a good business idea. This is great. um, but no, that's great. So
yeah.
you are a business owner, right? And so that means at one point in time you were in the startup phase. And so tell
Mhm.
us about what that journey looked like for you, because people want to know, how did you get to this point? How did you become successful? How did you
Yeah.
overcome your hurdles and get the capital that you needed to get to where you are today?
So the ironic piece about my business is that lenders don't fund my business. So the financial industry, for the most part, is a very like unfundable industry. Not, I'm
Hmm.
sure there's exceptions to the rule, but yeah, in my space, they really don't do it. So you have to have your own, own funding, ironically. But with that, there's not a lot of overhead within my industry. Now, you do have those businesses that have a lot of overhead, the trucking, the construction, money, that the laundromats, where you have to put out a lot of money in order to get started. Now,
Right,
there are also those businesses, like mine, probably like yours, right, where you don't have to put out a lot of money to get
right.
started. And now, so because mine is one of those, it's more so just about strategy. It's, you could
Hmm.
take, I think I took maybe like a couple $1,000s, that I had, but to kind of back up, I was working for an MCA company, right? And
Right.
now with that, I jumped into this industry without knowing anything about finance. I didn't have a financial background. I had a social work background. And
Hmm.
but I wanted to do something more, like, I always had an entrepreneurial spirit, but I wanted to do something like that basically made me more money than social work. That's really kind of what it was. And I jumped into sales, doing merchant cash advances, kind of talking to people over the phone, like, hey, like, do you want this business loan? I didn't really know anything about it, but I
Right.
became a top salesperson in about 3 months at the business, my last company. And so now, in doing that, I basically I learned every person's job at their firm. And reason being was because when I was speaking with my clients, I wanted to be able, they had questions and I couldn't answer their questions. And I would have to wait for someone else to get back to me to answer their questions. And so I just started learning as much as possible, just to
Right.
really be able to service my client. And in doing so, I learned their structure. I learned how they did things at the company. Now, I wasn't planning to take that and use it anywhere. It was more so literally just to service my customer. Now, I would say about a year in, they saw that I knew a lot about different things, and I was very much into bank loans. And so not just the high interest merchant cash advances. And so they're like, oh, you know what, we want to start a banking department, we want you to spearhead it, would you be into that? And I'm like, yeah, great. So I did that for about 6 months, and then COVID hit. And so now everybody's at home, nobody's getting paid, and I'm
Right.
like, you know what? I'm a jump. I'm a leave. I have nothing to lose. Like,
Uh-huh.
you're
Uh-huh.
paying me, like, I might as well not pay myself.
Right.
And so I jumped in, and banks weren't really lending at that time. Lending had kind of, dried up very,
Right.
like,
Right.
severely. So I'm like, all right, I jumped in, and I would say around, like, I think it was like December 2020, I actually had to go back to that job, and I had to work two jobs at the same time. So I had to because I didn't have the funds. I had to, like, get
Hmm.
more funding to do what I needed to do, and build my website, and do different things. And so now I went back, and goodness gracious, did I not want to go back. I already, like, during COVID, when everybody was just chilling at home and, watering their trees, like, I was building my business. And so when I had to, like, go back and stay there maybe for like another 6 months, I was miserable. I was like, I need to be home. I need to just focus on my business and building my business. And so the time came around Christmas that year that I was free, and I was able to quit and just kind of be full time, on my own. It was the first
Right.
time that I didn't have a regular job and also some type of, like, outside, hobby. So now it's like my entrepreneurial life, I think for a long time, actually, where I had a regular job, like my social work, supporting me. And then I could just go out and I can see exactly if I could do what I can do on my own. But this is the first time I just jumped into full way. I had no other income supporting me. I had to do it for myself. So it was more so about strategy. I had now the funds to just kind of start, like I said, a website, get some, do some preliminary marketing, get some leads, that type of thing, and just jump in again, I didn't have to buy equipment. Like, I didn't have to do like a whole office. I could just be at
Right.
home. So there wasn't a lot of money I had to put into it, but it was time, it was strategy. My sister actually came on with me. So when I started the business, we started the business together actually. And so I had a partner. And I think that was probably like
Right.
the biggest, piece, even with the company that I was working for. I had to tell them like, hey, like, I don't want to work here no more.
Right.
Right. And so they were like, well, you can't, I don't know how you're going to do this on your own. And he was working with his brother. They were partners, and he had, like a whole large company. Right. So, but they started together. And so he's like, I don't know how you're going to do this on your own. And it's difficult. And, this job is going to be here basically, for you. And I was like, well, I'm actually not going to be doing it on my own. I'm going to be with my sister. And,
Right.
just like you're with your brother, I'm with my sister.
Right.
Oh, all right. Like, like that.
Now he's salty.
Yeah, oh, they were salty for a while actually. But yeah, so with that, I had my partner, I had some strategies, but even the idea of just becoming successful, it's just a long game. It's not,
Absolutely.
I mean, yeah, even now, the idea of just, well, you're successful, I don't think I've reached that pinnacle of success, nowhere near it. We're still climbing. We're still, even with the products that we offered for the most part about 9 different lending products. That's how many, really there are out there. We've categorized them, but bank loans and lines of credit, equipment and real estate. And there's like accounts receivable. There's like a decent amount of business lending products.
Right.
And people always said niche down. And we
Mhm.
were like, no, like not happening. Like,
Right.
and it wasn't until recently that we actually niched down to term loans and lines of credit. And I would say it was a breath of fresh air. It was like, not
Yeah.
having so much to do, like not having all these products, and even how far, we go into the process with the customer, we changed up. So it was before give me all of your documents. Like kind of like I was playing the underwriting that the bank would have essentially,
Right.
but give me all your documents. I'm going to like, streamline the process. I'm going to go over this with the lender. I'm going to send everything in, but it became too much. And it's more so I had to realize, what does the client need? What do they
Right.
want? They don't necessarily need me to streamline the process. They need me to get them the lender that's going to approve them. Let me let the lender do, what the lender does.
Right.
So there's a lot of different things that we had to change up. Marketing, there's a lot of marketing tactics and strategies that we are still changing up, that we're still like, trying to, get the hang of different social media platforms. We don't buy any of our leads. Everything comes from social media, referrals. We do everything the organic way. And it is hard.
Yeah.
Like it's not easy. And so with that, it's a work in progress. But I
Mhm.
guess in a nutshell, that's my story.
And it's a journey, right? It's a beautiful journey. You just shared an amazing story with several pivots, with really you understanding that this is not a linear process, right? You were working for someone else. You decided that this is what you wanted to do. You wanted to go into entrepreneurship, and then you went back to work. And that's okay. It's okay to recognize that actually I need to take a quick turn to make some changes, and then I can go back to what I was doing. And so I commend you for recognizing that it's okay to take difference. Even with people telling you to niche down, right?
Mhm.
And you're in that, I don't want to do that. This is what I want
Yeah.
to focus on. This is what I think is best. And then
Mhm.
eventually you got to the point where actually we do need to focus on some very specific things. And that's
Yes.
working, right? And then understanding that you don't have to do it all. You don't have to do the underwriter's job, because that's
Yeah.
not your job. It's extra stress,
Yeah.
it's extra time. That's time that you could be dedicating to
I
something else,
do.
protecting your business. So, because that, I want to kudos to you, right, for understanding and recognizing when things need to change. And I think that's very important in your entrepreneurial journey, is knowing that everything does not have to be a straight line. Sometimes it's going to be up and down, and you have to make pivots. And so, being comfortable with that is very, very important. So, congratulations to you.
Thank you. Thank you very much. And you know what? One thing I want to add to that, beautiful synopsis. Um, it Even though there are certain things that we didn't do, like we didn't pivot, right? We didn't, niche down right away, and we were doing the underwriting. All of that aided in what I do now. So like it added to
Mhm.
my knowledge base. Like I had to go on
Mhm.
that journey to be the expert that I am in business financing. So if I niche down, like I wouldn't know about all these products. I wouldn't be
Right.
able to speak with the business owner. I can't tell them the range of information that, that I have. When I'm looking at, now I know I look at tax returns and I can, determine what your debt service coverage ratio is, and what your EBITDA is, like things that I wouldn't have known if I just immediately took the easy route, you
Right.
know. So some things you have to kind of go on that long journey to figure out exactly what it is you need to do as a business owner.
Absolutely. That's the truth. There is no wrong turns. It's always going to lead you back to where you need to be.
Yeah.
Yes,
Yeah.
great. Well, Portia, tell the people where they can find you and where they can find LenPick. Where can we reach you?
Yes. So that's lenpick.com, LEN as in Nancy, PICK. So you can go to our website. You can actually, we have online a qualification tool. So where you literally can just put in your information and you can be qualified for a business lending program. And then we're going to basically let exactly which lender is going to be able to approve you once we speak with you and just verify that information because people do lie, right? So we just have to verify that information and we'll be able to let you know what lender is going to be able to approve you. But we're also on all the social media platforms. So you can find me on LinkedIn, Porsha Brooks, as well as the company LenPick and yeah, Facebook and TikTok and all the good ones. Yeah.
Absolutely. Great. Thank you. And I'm Diona Richards across all platforms: LinkedIn, TikTok, Instagram, Twitter, and all the other ones that are out there. Portia, it was great talking to you today. Thank you so much for talking to us about LenPick and sharing your entrepreneurial journey as well.
Thank you for having me, Dee. It was a pleasure.
Absolutely. Bye. Okay. So, how was that for you?
Good. I liked it. You know what?